Hi all, and welcome to another market update. So today I'm looking at the macro since I haven't done one for a week. You're going to have to put up me today because I took a bit of a dry throat, too many beers on the weekend. So if we look at the inflation, as you can see, it's been going up since October 2021. And once you've got 6 months of high inflation and no growth, that's classed as a recession, but the government are not going to tell you that. So we peaked at 9.1 and then we started going down. So last month we had 8.2. So the next CPI print is the 10th of November. So this comes down to lower than 8.2. Hopefully it comes down to 8 or it doesn't go further up, otherwise it'd be bad for the economy. But if this starts coming down again now the next month, that'll be 1, 2, 3, that'll be 4 months of lower inflation, and that's good news, that is. So that'll be good for the economy. So I just wanted to show you this, the United States inflation rate. So I'll give you the link to this on the link below. We've also got the FOMC meeting Wednesday, so to see if they're going to put interest rates up, I reckon they're going to go by 0.75. And then we got the American payroll job market Friday, so that's going to be important too. So if we start looking at the DXY today, as you can see on the daily, I'm still expecting us for us to come down to 108 to our 106. As you can see, we're on wave C now on our Elliott wave, which is still intact. So we've done 5 waves. We've done our A, B. Now we're waiting for the C correction. So by here you can see topped out at 114. So you got a higher high. And then you come down to 110, which this is a higher low. And as you can see, to get another higher high, you've got to come up here to beat the previous high or the swing high here. But instead, this is swing high, but no, it's not. That's full of crap. Instead, you've got a lower high. So you get higher high, higher low. Normally get higher high again, but you got to beat this neckline by here. So this is why it's giving you an ABC correction. So this is called a lower high. Now this come down here, which broke the previous low, and this is called a lower low. So this is broken structure, which is looking good for Bitcoin and cryptocurrencies on the market in general. So at the moment, it's had a bounce up now to the 20 EMA. So hopefully the DXY will start behaving himself and start crashing down here over the next few days. So if we look at the weekly, let's have a look. Let's have a look in the MACD. If this does show up, it does take a while to show up. Sometimes it is quite slow. But we are seeing a lot of weakness on the weekly. Maybe we'll come back to that. So if we go over to the British pound or the euro, again, you could see this pumping up. It's just underneath the 20 EMA. So this is the weekly chart, sorry. We may come down again to the 140 and hopefully this will shoot off up. The same as on the euro. So any currency against the dollar, usually if the dollar goes up, all the currencies go down. So here we go, look. So if you look at the weekly MACD, you can see the cross. So this is a golden cross. So this is positive. So that's the Great Pound. If you go to the DXY, so you can see it's done a death cross. It's the opposite. So if we look at the SPX 500, so SPX 500 on the weekly. So as you can see, we've done our 5 waves and we're now in an ABC. Hopefully we've corrected our ABC and the SPX 500 is coming up, which is stuck on 3009. Probably get a rebound and then an impulsive move to test the B wave highs again of 4200. Hopefully break out and then hopefully to all-time highs maybe next year, but it all depends what economic mess we're in then. So anyway, that's my market update for today. Thanks for watching. By the way, like and subscribe to the video, please. Thank you very much.